Hello everyone and welcome to this lunchtime learning session with UnderwriteMe. In this session we'll be looking at protection and how UnderwriteMe's protection platform can save you time, improve protection conversions and deliver better customer outcomes. The platform offers pre-sales underwritten quotes, fully underwritten premiums, buy now prices and benefits, and access to multiple insurers all in one place, making it quicker and easier for advisors to integrate protection into their conversations with customers. We will also touch on consumer duty and how the platform can help meet these upcoming regulations. This session is going to be hosted by Romeesa Khan, Hybrid Account Manager at UnderwriteMe, and Steve Baldy, Director of Underwriting. If you have any questions, select the Ask Question tab on the left-hand side and submit a question for our panelists. I'll now hand over to Romeesa and Steve to kick off the session. Over to you guys.
Thank you. Just going to share my screen. Hopefully you can see that okay. So good afternoon all and welcome to the Protection Platform webinar by UnderwriteMe. Today Steve and I are going to be talking to you about the protection puzzle and how the protection platform can help you save time and deliver better customer outcomes. Now, for today's agenda, we're going to be focusing on who we are and what we do. We're going to be giving you a context around protection underwriting and walking you through some case studies that we keyed into the protection platform. We're also going to be talking to you about how the platform can help you deliver great customer outcomes in line with the new consumer duty regulations and how the protection platform process differs to the traditional protection selling process. We'll then be walking you through some advisor feedback and then showing you how you can register with some question and answers towards the end. We will be asking you a couple of polls during this webinar as well, so please do feel free to answer any of the questions that you see that will show up on the screen. So at UnderwriteMe, we're on a mission to transform the life insurance markets around the world through the power of our technology. UnderwriteMe was founded in 2012, and we recognized there was a need to change the life insurance application journey from a complicated, inefficient experience to one that makes the buying process easier and faster for customers and advisors alike. Now, Pacific Life Re was our original investor and became 100% owner in 2018. PLRE are one of the youngest but fastest growing reinsurers in the UK, sitting behind some of the largest life insurers that you'll also be familiar with. We've achieved some successful milestones over the last 12 years, and this includes having over 1 million policies activated through our protection platform. We've got over 1,500 distribution partners in the UK using the platform, and we do have an international presence in 12 countries with 25 global implementations of our underwriting rules engine. Now, the protection platform has over 21% of the UK protection market share submitting business through it, so we do have quite a big chunk of the market share. And at UnderwriteMe, we believe the power of technology can truly streamline the end-to-end process of sourcing, selling, and submitting protection business. We also think that the protection process should be as easy as buying car insurance. So let's explore on the next slide as to how the protection platform can help achieve this. Now, the protection platform offers a single underwriting journey that allows you to gain fully underwritten decisions from multiple providers in one application. Now, this has been achieved by partnering with major providers who have collectively agreed on a single underwriting question set that gives you accurate underwritten premiums from all of those providers in that single app. This is the full quote, apply and buy journey without the need of advisors having to make pre-sales calls to these providers or going direct to do individual applications. Now, some of the benefits that you can gain from the protection platform includes the fact that you can gain instant live underwritten premiums from 8 major providers in one go. This allows you to free up more time from having to run multiple applications with different insurers for a client. And with the flexibility of the protection platform, advisors also have the ability to run pre-sales underwriting for multiple insurers at any stage of the application journey. And this allows you to spend less time on the phone to those pre-sales underwriting lines whilst producing more accurate quoting with any medical disclosures factored in. You also have the ability to do a multi-insurer, multi-product application. So you can take out life cover with insurer A and life and kick with insurer B, all in a single application. And finally, the protection platform is completely free to use and there's no deductions to advisors' commissions either. So in other words, there's absolutely no downside to you using or submitting business via the system. So we've got 8 major insurance providers available on the protection platform, and those providers include Vitality, The Exeter, Liverpool Victoria, Royal London, Scottish Widows, HSBC Life, AIG, and Guardian, which was the latest major provider to join the panel just at the end of 2022. I'll now hand over to Steve to give more of a background on protection underwriting.
Thanks, Romeesa. Good afternoon, everyone. Hopefully you can see me. I'm Steve Baldy. I'm Director of Underwriting at UnderwriteMe. I've been asked to talk to you today about underwriting, why we do it, and what difference it can make to you by using the protection platform. So I guess I've got a little bit of an underwriting interlude for you. I thought that to help you understand why we underwrite, it'd be useful to start with the question, what makes an insurance premium? Because it's the makeup of that premium and the cover you apply for that determines how we underwrite that person. An insurance premium is made up of 4 main factors, and you can see them here on the screen. Commissions, profit, and expenses make up about 40% of that premium. But the bulk of the premium is due to the cost of the claims that the insurer is expected to pay out. So life is finite, as we all know that. We all know this to be true, but most of us don't know when. And the concept of underwriting exists really to analyze that risk and to try and to predict when that claim will be. And it's clever actuaries who use statistical analysis who will work out the probable cost of paying those claims. And it's this analysis, which is based on several factors, including life expectancy, or for your income protection, the chance of claiming for a disability, maybe the profile of an insurer's customer base, the customer's age, postcode, social demographics, occupations, the quality of their underwriting process, or even the type of distributor they use. All of these things will add into that claims experience. And once you have a good picture of that customer base, then the projected claims can be estimated and the premium calculated. Then a proportion of that premium can be put into reserves by the insurer to pay for those expected claims. Next slide, please, Romeesa. Thank you. So, yeah, as I just mentioned, it's the claims that make up the bulk of that, and it's what we'll be discussing today. So once the premium is calculated, then the job of the underwriter is simply to protect the insurer by evaluating the customer's history and applying the appropriate premium that is relevant to the claims that are expected. And here are some of the factors that an underwriter will consider. So very quickly, age. Simply speaking, the younger you are, the smaller the premium will be. A 20-year-old with a life expectancy of 80 has a much smaller probability of death than an older person with a shorter term. Smoking decreases your life expectancy. I think we all know that. A smoker has around 10 fewer years to live than a non-smoker. And this can add up to about 30% extra premium cost. Simply speaking, the more you smoke, the higher that premium goes up. And generally speaking, the greater the sum assured and the longer the policy term, then the greater the risk and the more the insurer has to put into its reserves. Therefore, the bigger the premium will be. And the chances of claiming on an income protection or a critical illness policy are quite high and much higher than life cover. So these two products are priced accordingly and they are underwritten differently. But you'll be pleased to know that it's not all doom and gloom. Even with all the complexities of products and underwriting, over 80% of all the applicants to the protection platform are offered a buy now premium from at least one insurer. Next slide, please. Thank you. So the underwriters are usually highly trained in medical concepts and often specialises in things like cancers and heart diseases. The underwriter uses lots of different tools to assess a person's suitability for their insurance. Application disclosures are always the basis for any risk assessment, and I'm sure you're aware increasingly these are built into online systems. About 1 in 10 customers require a medical report from their doctor simply because the disclosure is too complex for the application disclosure alone or for the underwriting engine to underwrite it. Diabetes might be a good example of this, and we'll come into this in a second. Medical exams are used for physical or what we might call biometric testing, such as height and weight, and blood tests for pathological testing, such as diabetic blood tests. And medical exams are nearly always used for overweight customers, people with diabetes or cardiovascular problems such as high blood pressure or high cholesterol. Financial reports are sought usually just to check large sums assured and make sure that the person's suitable for the product they're applying for. And this visual here is taken from an online guide that every underwriter will use. It's built by doctors and underwriters. It's based on population studies. And it's those underwriting guidelines and decisions that are aligned with the insurer's philosophy. And here you can see in the guide, it's suggesting a customer with a diabetic eye complication to be rated an extra 25% of their premium. Next slide, please. Thank you. So that's a little bit of background on underwriting. I'm going to take you through a couple of case studies now. We'll look at how they would be assessed by an underwriter and then show you how the protection platform delivers more and better underwriting decisions more quickly. The first case study is on a family history of breast cancer. Now, it's a frequently disclosed condition most of you will be familiar with. It's because it's the most common form of cancer in women. Up to 14% of the female population will unfortunately at some point be be diagnosed. However, it's also common illness that affects women over 50 and actually more particularly over 75. So although it's a frequently disclosed family illness, because it's more common in older ages and our application only asks about family histories under the age of 65, it's much less commonly disclosed in an insurance population or insurance application form. And the reason we put limits on that age in the application form is that because the younger the person is affected with breast cancer, the more likely it is they'll have a genetic or a familial aspect to it that runs through the family. And for most insurers, the younger the age of the relative, the more relatives a person has, the worse the outlook is for underwriting. It might surprise you that it's about our 9th most disclosed medical condition on the platform. Up to 5% of all female applicants disclose it as well. But in great news, more than 80% of those disclosures are given a standard premium, and even some insurers give up to 90% of standard decisions to customers on the platform. Next slide, please, Romeesa. I think it's over to you.
Thanks, Steve. So we wanted to run you through some of these case study examples that we've keyed into the protection platform just to show you how efficiently you can produce multiple insurers' decisions with medical disclosures factored in, all in a single underwriting journey. So in this case study, we've got a female client who's aged 35. She's a non-smoker, 5'3", 9 stone 5, so average weight and height. She's a teacher, drinks 3 glasses of wine a week, but she has a family history of breast cancer with a mother aged 30. Now, as you can see in this screenshot, we've got the decisions coming back from the protection platform, and we've applied for a Life and Kick product. And as we can see from some of the decisions coming back, we've got a buy now decision coming back from Vitality. And if I was to click on the details tab, it gives us decision information explaining to us that an exclusion applies for breast cancer in the Kick, Cover and TPD. Now, it's great that we've got a buy now decision available for the client and Vitality is the cheapest, but this policy may not be the best one for the client as her chance of getting breast cancer may be slightly higher due to the fact that she has a family history, and therefore it's important to ensure that the market is being fully scanned to see if there is a provider providing a more well-rounded policy for this client. Now, if we scroll down a little bit, we've got some decisions coming back from other providers. So if we look at LV's decision, they're coming back with a buy now non-standard decision, a little bit more expensive at around £35. However, if we look at Royal London's decision coming back, they're coming back with a buy now decision with no ratings, no exclusions, although it is £6 more expensive. However, the policy covers the client more appropriately in the worst event, and it is more fit for purpose. Now, a huge benefit from this process is that you've received multiple underwriting stances and saved yourself so much time from having to sit on pre-sales calls to any of these providers or having to go direct to run an application with them. This shows you that the protection platform can allow you to meet your clients' expectations a lot more quickly and hopefully provide better client outcomes as well. So now I'm going to hand back over to Steve to run through another case scenario.
Thanks, Romeesa. Okay, so second case study is another commonly disclosed condition, diabetes. But what is diabetes? Diabetes is an illness that affects the pancreas, and the pancreas is just a small gland that's tucked away behind your liver. And what the pancreas does is it produces a hormone which is called insulin. Now, insulin helps a body to absorb the sugars that a person eats and drinks, and it's those sugars that give you energy. In diabetes, there's a lack of healthy cells, and the body doesn't produce enough insulin, or it doesn't produce any at all. And untreated, this can cause a buildup of sugar in the blood because the body's not absorbing those sugars properly. And it's the buildup of the blood sugar that can cause complications, or even at sort of worse, even at worse, it could cause death. So where the body doesn't produce enough any insulin, it's known as type 1 diabetes. People with this type of diabetes need injections of insulin to supplement their own insulin deficiency. And type 1 diabetics usually carry a worse underwriting risk. In type 2 diabetes, the pancreas does produce insulin, but much less than in a normal healthy person. And these people normally need tablets to supplement their insulin deficiency. About 90% of those diagnosed with type 2, that's about 6% of the UK population. So it's a really common and growing problem. And in underwriting terms, type 2 diabetes are less of a risk for insurance purposes. They can now often be underwritten online without the need for an underwriter to review it. And the control is easier to maintain and often means fewer complications. And it's those complications that are associated with diabetes that usually compound the risk. When it comes to the underwriting risk itself, an underwriter will be looking at a person's age, time since they were diagnosed, also things like smoking, heart problems, high blood pressure or high cholesterol, and whether or not the person has a poor control or poor compliance with their medication. So even though an estimated 6% of the UK population do have diabetes, only 3% of customers disclose it on our protection platform. Much like a family history of breast cancer, it's much more prevalent in older customers, something like 40% are over 65. So it's a less common condition in people applying for insurance. And that makes it about the 13th most common disclosure that we see on the protection platform. However, as we do know more about diabetes, so our underwriting becomes much more refined, and up to half of all applicants now, mainly type 2 diabetics, can be underwritten online without any underwriter human intervention whatsoever. And that number can be as high as 2/3 with one insurer on the platform. So you are able to receive a fully underwritten quote during your application form from multiple insurers about 50% of the time, and that number is growing. Romeesa?
Thanks, Steve. So let's walk through our next case study with a diabetes disclosure. And on the protection platform, we've got a screenshot where we've applied for life cover for this client over 25 years. And our client, she's a female, age 35, non-smoker, 5'3", but is 11 stone, so has a slightly high BMI. She's a teacher and she has type 2 diabetes and was diagnosed in 2018. There's no further investigations and the client knows the reading at 7%. Now, as we can see on the results screen, we have different underwriting decisions returning from providers. So I can see that AIG are coming back with the buy now decision, which is non-standard at £29.72. And within this policy, I can see that guaranteed insurability options is declined. And if I go down and look at Vitality's decision, they're also offering cover at £29.90. So it's a few pennies more, although there's no exclusions on this decision. And I can also see with HSBC Life's decision, they have referred the case, although it is the cheapest appearing on the protection platform as £27.78. Although we do know that with referred cases, this can also be subject to change once they gather all the medical evidence, and it can also be a bit more time consuming for the client and advisor as well. Now, the system has helped you get to all of these decisions immediately and shows you there are options to secure cover for your client straight away. And you've got to these decisions all through doing a single application, and you've also done thorough research for your client as well. I just want to talk you through some typical advisor frustrations that they experience in their current protection selling processes. And this is something that we tend to ask advisors. And one of the biggest frustrations that they experience in the protection selling process includes the fact that they might have to do multiple applications for a client. If you've applied to one insurance provider and they've either declined the client or postponed the case, you might have to do another application with a completely separate insurance provider, and that insurance provider may ask further underwriting questions that the previous insurer didn't ask. So you might also face unnecessary underwriting questions as well. So you would have to go back to the client with further questions, which takes up more of your time and more of the client's time as well. Multiple pre-sales calls is a big frustration. We've asked brokers how long it typically takes for them to sit on a pre-sales calls, and it can take anywhere between 15 minutes to an hour. Just depends which insurer you're speaking to and what time of day that you catch them, but it is a lot of time taken in the advisor's day. Another frustration is unexpected premium changes. I'm sure some of you might have experienced it where you're doing an application and then midway through application, your client remembers to disclose something, and then you realize that the provider that you're actually applying with might not be so favorable for this client, and then you might actually have to go back to square one and do your research again in finding the best provider. And then finally, understanding each insurer system. Some insurer systems are more user-friendly than others, some are more clunky, and advisors are having to navigate their way through different provider portals. I just wanted to ask you all, so we're going to put up a poll. We wanted to know, how many insurers would you typically call for a protection-seeking client? So we've got a few options here. We've got 0 to 1 insurers, 1 to 2 insurers, 3 to 5 insurers, or 5 or more insurance providers. Now, we will run through the poll answers towards the end of the presentation. So I'll just give it a few more seconds for you guys to answer. So with this one, it's probably best to select one answer, although I think it does allow you to select multiple answers. Okay, so hopefully that's been answered. So I'll just move on to the next slide. So how does the protection platform process differ to the traditional protection selling process? So if we look at the diagram on the left-hand side, this is the process that advisors would typically go through when they have not used a protection platform. So advisors will generally do a quick quote on their quick quoting portal. They'll put in basic information like the client's weight, height, smoker status, and then they'll look at estimated prices coming back from the providers. At that stage, the advisor then picks up the phone to some of these providers to get pre-sales underwriting decisions. Again, calls could take anywhere between 15 minutes to an hour. And then finally, the advisor will select one insurance provider and do the full application with the client. Now, once this application's been completed, you can get one of these outcomes. If you get a buy now decision for the client, that's great. You can secure the cover for the client straight away. But if you get a referred decision, a declined decision, or even a postponed decision, it's not the most favorable decision for the client, and then you're kind of back to square one with your research. And that's where we've kind of realized that the protection process is quite long-winded and it's fragmented, and hopefully the protection platform is going to address this. So we just wanted to pull up a second poll because it would be interesting to know from your side what frustrates you about the protection selling process. So you can select more than one answer here. So you've got different options. So you've got unexpected disclosures from a client midway through application. You've got doing more than one application with more than one provider. You've got spending time sitting on pre-sales calls for a client, and also the fact that you might experience unnecessary underwriting questions from different insurance providers. So again, we will run through the poll results towards the end of this presentation. Okay, so just talk about how that process differs to the protection platform process. Now, on the right-hand side, I've got a diagram of the protection platform process. And on the protection platform, you can do a quick quote for live pre-sales decisions from 8 providers across multiple products. And it eliminates the part where you actually have to make any pre-sales calls to any of these insurers on panel. You can then proceed ahead and complete the full underwriting application for the client, and straight away you can gain fully underwritten decisions from all of those providers at a click of a button. On the protection platform, you can also put the policy on risk and submit it straight through the platform without being redirected to the insurer's portals or rekeying the application either. So this is the end-to-end protection journey. So how does this help deliver better client outcomes? So we're going to explore some of the FCA consumer duty regulations and how the protection platform can help support some of the outcomes. So in line with the new consumer duty regulations, the FCA has been concerned about eroded consumer trust and consumer understanding. Customers need to understand what they're buying and how it provides a solution for them in the worst event. And one of the 4 outcomes from the FCA is consumer understanding. So the FCA guidelines are: we would expect products to come with a timely and clear, in a timely manner with clear information that customers can understand so that they can make informed financial decisions. Now, one way the protection platform can help with better consumer understanding is through explaining products and features clearly through quality comparison. And the protection platform offers quality comparison through De facto Compare, which is a free tool that you can use within the protection platform. And it gives a breakdown of things like the insurer's claim payout rates, value-added services available within these policies, such as virtual GP services, and number of CI conditions that's covered in a provider's policy, to name a few. So very quickly, you can pinpoint some factual information to the client and give them a better understanding of the policy features and what would be most suitable for them. This document can also be downloaded and saved as a PDF, which you can keep for your own records, or you can even share it with the client as well. Now, another behaviour that the FCA is concerned about is products and services which are not fit for purpose. And the FCA guidelines are that firms should be offering customers products that meets their needs rather than pushing products that aren't suitable or needed. Now, one way the protection platform can help with this area is through the use of our comparison document, which shows all of the insurer's decisions coming back from all of the across multiple products as well. Now, within this comprehensive document, advisors can see all of the decisions coming back, and it does show that the advisor has done thorough research, which factually highlights the differences in the products, such as whether there's a price increase or an exclusion applied, or whether waiver of premium is accepted, and so on. So it allows you to suitably meet the customer's needs. This document can also be saved as part of your own evidence, making it useful for compliance purposes as well. And finally, offering products and services that represent fair value is also an important requirement from the FCA. And fair value has been defined in the rules as the amount paid for a product which is reasonable relative to the benefits provided by a product. Assessing whether a particular product is fair, the pricing of a particular product is fair, can be quite complex, as the benefits covered can vary from provider to provider. And very similar to the comparison document on the last screen, the protection platform results screen can help advisors and clients understand how the final decisions have been arrived by multiple insurers and even across multiple products. And you can see slashes in the standard pricing to show the standard price, and then the final fully underwritten premium just underneath it as well. Now on this screen, we've got decisions returning for a life and kick product and life cover product as well. And in the basket, we've got LV for the life and kick product and Vitality for the life cover product. And this shows you that you can apply for multiple insurers and multiple products in a single application. And sometimes this is the most favorable thing to do for the client, and the protection platform allows you to do this with ease without having to go to individual providers' portals to do separate applications. Now, we wanted to share some feedback from advisors who have used the protection platform from the first time. So we surveyed 15 advisors who put cases through the system and asked them what benefits they experienced from using the platform. Now, we found that 12 advisors spent less time on protection admin, so this included pre-sales underwriting, chasing medical underwriting, and submitting multiple applications. They also experienced better customer outcomes as a result of unexpectedly favourable insurer underwriting decisions, and an improved application experience and better conversations with customers due to the UnderwriteMe client-friendly question set. 7 out of 12 of those advisors also found that they experienced more protection sales and more protection conversations with the clients as well. We also asked advisors if they gained unexpected positive outcomes from insurers and whether they won more business over since using the protection platform. And the results showed that there was a spread of business across more insurers, and advisors particularly won more business from the following insurers. So as you can see from the screen, 9 advisors experienced more business from Royal London, 8 from Scottish Widows, 7 from AIG, 7 said LV, and 7 also said the Exeter. And finally, we asked brokers on a scale of 1 to 5, how prepared would you be to recommend the protection platform to another advisor? Now, 100% of these advisors said definitely, and we do have some quotes up on the screen from these advisors themselves and what they thought of the protection platform. So one advisor said that the single app is a game changer and that they definitely won more business that they wouldn't have ordinarily have done so. If we look at the second quote, this advisor has also said that it saved them a lot of time, and this can save on average hours per case on pre-sales underwriting calls as well. Now, just to summarize on some of the benefits of the protection platform allows you to do pre-sales underwriting at any stage of the journey, so you're spending less time on pre-sales calls. You can also gain instant live, fully underwritten decisions from 8 major providers in one hit. You also have a much smaller pipeline, so it's helping you to save time, and you can also experience a higher STP rate. And you're only getting familiar with one system and a single client-friendly question set, with no need to rekey this application to the provider direct. You also have the ability to do a multi-insurer, multi-product application in one hit, and you can split both of the products between different insurers in that single application. And finally, it's completely free to use with no deductions to your commissions whatsoever. So if you guys are curious to know how you can register to the protection platform, I've put some QR codes up on the screen. So feel free to scan these codes. So the orange one will take you through to our registration page, where you can register to the protection platform. It probably takes only a couple minutes to register. You can authorize UnderwriteMe to collect your agency codes on your behalf, and then we can give you access to the system within a few days, or you can key in your agency code yourself if you do have them to hand. Now, if you do want to see a demo of the protection platform, we do run daily webinar sessions, bringing the protection platform to life, which is held by an account manager for 30 minutes. So do scan that QR code and we'll happily take you through one of those demos and answer any questions along the way. And feel free to contact us at info@underwriteme.co.uk if you have any further questions moving on from this webinar. So thanks, everyone. So happy to take any questions.
Thanks so much, Romeesa and Steve. That was incredibly informative, a real whistle-stop tour. So I just thought I would share the poll results. So from the first poll, which was about how many insurers brokers contacted, about 51% they contacted 3 to 5 insurers, about 38% said they contacted 1 to 2, and 11% said they contacted 5 or more. And then on the second poll, the most frustrating part of the protection process was unnecessary underwriting questions from different insurance providers at about 28%. And then doing more than one application was about 23%. And spending time on pre-sales calls came to about 22%. And then unexpected disclosures from a client midway through was about a quarter. So I think there's some very interesting findings there. Romeesa, I think you need to turn, if you could turn your camera on, please. And Steve, if you could also turn your camera on as well. I will get started with questions. Romeesa, you're still screen sharing. So if you could stop sharing your screen and then just turn on your camera, that would be great.
My camera on?
Your camera's on, but you're still sharing the last slide. So
okay. I thought I'd leave them on in the background so that advisors, if they wanted to scan any of these QR codes.
Okay, that's great.
So,
so one of the key questions that came up was whether there were plans to bring on any more insurers to the platform, because some of the some of the participants kind of mentioned L&G and Aviva as two providers with good medical underwriting that are not on the platform. So I don't know if who would like to take that question to kick off the Q&A.
Yeah, I mean, I'm happy to take that one. I did see a number of those questions. Not an unfamiliar question, it has to be said. We are in constant and fairly frequent dialogue with every insurer in the UK. So a lot of us UnderwriteMe have worked at those insurers over the last 20 to 25 years. So we have really good relationships. I guess it's safe to say some insurers are in more advanced talks than others, and we obviously can't discuss particulars due to legal sensitivities. We're working hard to get new insurers over the next 12 months, I'd say. We do have plans to add more insurer products fairly soon. So hopefully making the most of what we have already, making the insurer offering and the platform offering more compelling. But yeah, I mean, we're certainly close to every insurer in the UK market.
Great.
Yeah, I just wanted to add to that as well. We, if you are a whole of market broker and you do use providers outside of the protection platform, we're not saying this is going to completely replace your process, but it is going to complement it really well with your quick quoting portal, and you're still reducing the amount of pre-sales calls you're making. So it's still going to help you generate faster and sometimes better client outcomes that way.
There are also some questions about how the commission works, and I think some brokers are kind of asking about, because the platform is free, is there a cost or catch somewhere to the advisor using the platform, which I think shows the innate cynicism of brokers, but I don't know who wants to take that question.
Well, I mean, Romeesa mentioned right at the start, there is no catch. I'll tell you how it works. The protection platform's free to you guys to use. The insurers actually pay us to host it. So it's the insurers that are paying for the upkeep of the platform. Your insurer agency codes are linked to your commission structure in the usual way. So there are no changes to your commission when you're using the platform. So it's free to use for advisors paid for by the insurers. That's how it works.
Great.
So no downside.
Yeah.
No downside.
No downside. So another question that's come in is, some customers have said they're struggling with the cost of living, so they do not want protection, or maybe they want to discuss protection at a later point. How can the platform help in that scenario if you do have a customer who is kind of concerned about the price of protection?
Well, I think with the protection platform, it allows you to go into a little bit more depth about the quality of the policies and the features included within them. So if advisors are in a better position to, quickly explain things like which free virtual GP services are included within a policy, which are completely free for the customers to access, or any other benefits coming from that policy, like gym membership discounts, etc., the client is kind of saving money in that aspect as well. So I think just being able to share with clients, you've got access to these services from day one of starting the policy. It's kind of like the policy can pay for itself if you're getting those additional benefits within it. So yeah, I think the platform can help with just kind of allowing advisors to talk about the policy features in a bit more detail.
I've had a couple of questions through on whether there's a way that clients can access the medical questions and complete them themselves. I don't know if that's something you guys could talk a bit more about.
Yeah, I'm happy to answer that. So the clients can't complete the questions themselves, and this is because the protection platform question set is quite reflexive and is interactive. So it's something that the advisor would need to go through with the clients. So yeah, it's something that they probably have to do either in a face-to-face meeting or over telephone. So yeah.
Okay. I have another question, which I think, Romeesa, you did touch on near the end of the presentation, but just thought it would be good to return to it. Is how does the platform work with networks? Is it linked to agency codes? Can the entire process be done on your platform? So I think you did mention it, but I suppose just to reiterate for those that might have gone to make a cup of tea or something.
So even if you are with a network, enhanced commission club, whatever agency codes that you supply on the protection platform, the commission structure is just mirrored, just based on that agency code. So there's going to be no changes. It's always going to remain the same through the platform.
Great. And Steve, I was actually quite interested, as you mentioned during the presentation, that breast cancer and diabetes were some of the most disclosed conditions on the platform. I was just wondering what the top 3 were, or sorry to put you on the spot, but just from curiosity's sake.
The mental health is by far and away the biggest disclosure. Something like 15% of all disclosures are for stress, anxiety, or some kind of mental health disorder. Outside of that, family history, any family history really. Family histories are quite high, blood pressure, cholesterol, that kind of thing. It really depends on the product and the insurer, but yeah, they're the most likely disclosures.
Great. Let me just think, there are a couple more questions coming in. Sorry about this. So I suppose one person has asked if because there are some major providers that are not on the platform, how does this fit with consumer duty? So I don't know who wants to take that question. I know that you've said that you're in discussions with the insurers that are not on the platform, and there are still 8 insurers on the platform, but I don't know who wants to take that one.
Yeah, I'm happy to take that one. So again, we've got many whole of market brokers using our system, and they use it alongside their current portal. And I think in terms of the new consumer duty regulations, the protection platform is definitely a big tick box in line with that, because your research is a lot more thorough, and you're getting all these underwritten decisions straight away from all of these providers in that single application. And in terms of research to insurers outside of panel, there's probably maybe 2 or 3 insurers that you're probably just going to have to pick up the phone to or do some further underwriting calls on.
And I suppose during the presentation, I mean, just comparing like the pre-sales calls, which could take 15 minutes or up to an hour for some, depending on the time of day or what the case is. I suppose depending on the case, how long on average does the protection platform does it take to put in a case or to kind of get those fully underwritten quotes, just to kind of provide a real clear comparison?
Yeah, so I think if you're doing just one application, if you times that by 8 providers, just think of how long that would take an advisor if they actually did 8 life insurance applications. So you're definitely saving a lot of time. You're only doing that one application. Now, we did actually do a video with a broker in our office recently where he did a protection platform case and we were timing him, but he was an expert at the protection platform and he completed it under 2 minutes and got all these underwritten decisions. But obviously it just varies from broker to broker, obviously how long you spend with the client and going through the questions, etc. But again, you're still saving time because it's one application. You can apply for more than one product in that single application as well.
Great. So another consumer duty question is whether you think consumer duty will bolster the protection market, because I suppose it is something that would provide really good customer outcomes and it's a very, very good product, but there is a bit of a protection gap. I don't know if that's something you could speak to, Romeesa.
So what was the question again?
Do you think consumer duty will bolster the protection market?
Bolster as in like increase?
Yeah, I suppose just increase the increase applications to it, or lead more people. It might become more popular, I suppose.
I think it can become more popular, but we do know that the market is currently, when we speak to brokers, mortgage brokers particularly, they're quite busy in the mortgage market at the moment as well, and with things going quite expensive, I know the conversations can be a little bit difficult with clients, but I think if advisors again can kind of explain the policies a little bit better to their to clients, hopefully the protection conversation can be made a lot more easier, and hopefully the protection platform can help with that as well.
Well, thank you so much, Romeesa and Steve, for that really informative session. The platform really looks like it can take a lot of pain out of the protection process, save brokers a lot of time and effort, and give better outcomes to customers. So win-win all round, really. So thank you all for joining us today, and I hope you have a great day. Thank you so much.
Thanks,
everyone. Bye.